this week's currency update, it's been a fairly quiet week for the Australian dollar. We've sat in a 71.36 to 72.59 range so far this week. There's been a number of competing factors that have suppressed volatility. On the one hand, softer data, weak construction work done, and soft capex update suggests a softer Q4 GDP next week. And on the other, iron ore spent much of the week above $50, though it did fall below that level last night. Positive risk sentiment with the S&P 500 closing above 1950 for the first time in 7 weeks, and West Texas closing at $33.08 suggests we could see some upside for the Australian dollar. I wouldn't be surprised to see us pushing above 72.50 early next week. Now, while the Australian dollar has been quiet so far this week, FX traders have been focusing elsewhere. Last weekend, UK Prime Minister David Cameron achieved the opt-out clause he wanted from Europe on an ever closer union and moved to call a referendum in the UK on Europe on June 23. That fact, plus the Mayor of the City of London campaigning for British exit, has seen the pound drop sharply, and we hit a 7-year low early this week of 138.79. The euro has also traded heavily this week, below 110, and I think that weakness continues into the ECB meeting on the 10th of March. I wouldn't be surprised to see further weakness down to 108 around that date. Well, it has been a quiet week this week. Next week will be busier. We've got a raft of domestic risk events, including the RBA policy statement Tuesday, Q4 GDP on Wednesday, and merchandise trade data on Thursday. And in the US, we have a heavy schedule of data, with the highlights being a closely watched measure of manufacturing activity, the ISM on Tuesday, and non-farm payrolls on Friday. In China, we'll be watching the PMI very closely on Tuesday, and this weekend we have a G20 meeting in Shanghai. Now, the IMF this week threw down the gauntlet to G20, calling for bold multilateral action to boost growth and contain risks. Whether the G20 accepts that challenge will be important for global markets, and we'll be watching developments in Shanghai closely this weekend. Now, the Australian dollar has proven resilient in the face of weak global growth and soft China data. I think that resilience can continue next week, and I wouldn't be surprised to see us trading above 73 cents. But I do think the RBA statement on Tuesday and likely softer Q4 GDP on Wednesday should cap the move, and Westpac continues to forecast an Australian dollar back towards and through 70 cents by mid this year. These are all factors we can talk about in next week's currency update.